Good day, ladies and gentlemen. Welcome to Everyday Finance with Jay. My name is Jay. Let's talk about what to do with our tax return, especially in this coronavirus-induced financial crisis. If you're not aware of what's happening in the world right now, in the last week of February in 2020, the stock market saw one of the largest drops in history. The Dow Jones Industrial Average dropped more than 12%, and the technical term losing more than 10% is a market correction, and losing more than 20% goes into a recession territory. The current situation is that you might have a check from the government, a lump sum of cash, or if you're diligent enough, you have saved up some cash in the past several years. And with what's happening, even though the stock market is dropping, it's a huge opportunity for people who are 10 years or longer out towards retirement. So taking the standard age of 65, if you're 55 years old or younger, what's happening right now is a big opportunity. Legendary investor Warren Buffett still recommends to purchase stocks over the long time because he views it perform better than anything else. His company Berkshire Hathaway has more than $120 billion, one of the largest holdings of cash in the stock market. He is prepared for something to happen to the stock market in which he can use that amount of cash to buy stuff when it's on sale. There are always two sides to every story, to every coin. Some people might view the 12% loss in the Dow as, oh man, now's the time to sell everything. I just lost 12% of my savings. And other people might view the 12% as a sale, basically buying stuff on discount. You might say it is easy for a multi-billionaire such as Warren Buffett to not worry about money or losing some of it. Well, let's look at some data instead of focusing on him, even though he has made his wealth primarily from investing in the stock market, so he is pretty trustworthy in what he recommends. The housing bubble in 2008 was one of the worst economic crash in history. In March 2009, the Dow Jones average was below 7,000 points. And in February of 2020, this year, right before the last week of the month, the Dow Jones Industrial Average was over 29,000 points. Going from 7,000 points to over 29,000 points, that is over 300% growth. And if you just invest $100 a month, which by saving and adjusting your lifestyle, majority of us will be able to do that over that 11 years period. Your own money would have been only $13,200, and that would have grown over $72,000. Here's a study going into deeper depth about 2008 recession and what to learn from it in the top right corner. That is amazing growth. But what if you were prepared for the 2008 recession and had some cash saved around? Let's say you invested $10,000 when the Dow bottomed out and kept the $100 a month the same as you would have done in the previous example. And over a period of 11 years, same time period, you would have invested $23,200, but that would have ballooned to over $200,000, almost 10 times the amount that you spent, you earned back. So this is basically a friend coming to you asking, can I borrow $1,000 and in 10, 11 years I will pay you back over $9,000. That is so much more than you could have earned in any savings account. And that is exactly what happened to the stock market in the past decade. You might have heard about this phenomenal growth, but wasn't able to take advantage of it. Either you were a high school student, a college student, just started a job, or didn't have enough money saved aside, or just didn't really pay attention to the stock market and did not invest and take advantage of this. You're not alone, my friend, because I was in the same boat and I'm kicking myself for that right now. But we can't change the past. We can just only prepare for the future, what's to come ahead. A golden opportunity is right in front of us. Looking at what happened in the previous recessions, here's a picture of the past 90 years. Looking at this picture, you can see that a recession will happen between 5 to 10 years of economic growth. So between each of them, sometimes it's smaller than 5 years, but it typically is a cycle. And rinse and repeat. And it will last about 1 year. And currently we're sitting at the 11th year of economic expansion. And just by looking at the data for the past 90 years, it looks like a recession is bound to happen in the future. Right now, it's still not too late to prepare for it because looking at how long recession lasted in the past, usually about a year, longer or shorter, but on average a year. And 1 year is long enough to save up some cash and take advantage of this big sale. To wrap up today's video, in summary, looking at the historical data in the past 90 years is a cycle of economic growth and then economic decline. And we're looking at the peak of the economic growth, and what happened the last month of February is a sneak peek of what might happen in the near future. I don't want anything bad to happen to the market, but just looking at the data is bound to happen. I want you to be prepared for it and have some options. The worst thing to do is to be caught without a plan, and right now it's still not too late to prepare for it because on average there's about a year before it recovers. So we have a year to take advantage of this big Black Friday sale in the stock market. And if you have any questions, please comment down below. As always, I'm here to help and I would love to engage with you. And please subscribe and like this video. Have a good day.